We are ready to get started. So I just want to thank you all for being here today. My name is Sumit Kavor, and I am so privileged to have everyone here. I just want to welcome everyone, but in the honor of time, we wanted to really respect your time of being here prompt and start our presentation about the newest opportunity, Smartland's Colony Apartments, 153 unit here in Cleveland, Ohio, in Shaker Heights specifically. One of the things I want to tell you about is really share how here at Smartland, we are real estate entrepreneurs that see things that others do not and look for opportunities to create value. We're really privileged to be here and offer you an opportunity to partner with us in this newest investment opportunity. I'm really proud about this investment. One, because way back when I was born and my parents immigrated here to Cleveland, I was born in Shaker Heights. And so it's a real privilege to offer a very unique opportunity to invest and redevelop an area that has been growing, burgeoning, and just an exciting space. And it has always been a really amazing community to be in. And just to see that the plan that we're evolving for this opportunity. So I wanted to share a little bit about it. So let's go on to it. One, I just want to present myself. For those of you that may not know me, my name is Sumit Kavor, and I'm Smartland's Vice President and lead our Investor Relations Department. I want to share that this opportunity is a Reg D 506C, which is only available to accredited investors. We're really privileged to have you here and hope you can recommend or refer family and friends that may participate in building wealth with us through investing in real estate. So let me go on and just highlight a little bit of a legal disclaimer that shows that a 506C investment, and you can read this at your leisure. Now that you've had a moment to read through this amazing legal jargon and disclaimer, I want to go on and really hit the juice of why you're here and share why we love this opportunity and what we like about it. But before I do that, I think it's really important to learn about who we are and how we're going to manage and build wealth by investing. To me, it's really important to be a hands-on operator and to be really focused on creating value through the life cycle of the investment strategy. At Smartland, we were founded in 2008 here in Cleveland, Ohio, where I'm based, and we relocated our headquarters to Miami, Florida as we expanded. Vadim Kleiner, an entrepreneur in the technology world, had exited his company and started to look at building wealth and storing wealth. And that's how he came to residential real estate. As he started to do this more and more, he found inefficiencies in the process within residential real estate. But family and friends would approach him on how he built wealth and continued to grow that. And as Vadim grew, he brought in partners and also continued to serve people and investors across the world. We have many investors today that talk with us from different time zones, and we're really privileged to help them build wealth. What we're really proud about is over time, we vertically integrate the company. We try to bring everything we can in-house because that delivers a better experience to tenants. It delivers a better experience to the redevelopment and construction process and overall to investors in the partnership. We bring in as much as we can in-house, so investment management, property management, tenant screening, marketing, design, acquisitions, construction, as many components that you could see. And one of the reasons we did that is it gives us a competitive advantage versus the smaller players that are looking to compete with us. We're able to deliver great value because our team is all in-house as much as possible. And that's why we've really focused on being experts in residential real estate and really hands-on operators. One of the kind of figures for me as a numbers person, and really privileged, is to say, for every dollar that someone has invested, Smartland has returned $2.10. And that's what we call in the industry as a 2.1x equity multiple on invested capital. As you look at building wealth for yourself or your family, it's important to get a return on your capital and preserve your principal. One of those vehicles that we've found to be a great vehicle is real estate. Over our track record, we've delivered over a 21% average investor return, net to investors. That's not gross, that is net to investors. And it's really important for my personal beliefs to share net to investors because many others may market gross IRRs and really have these larger figures, but we really want to show investors what are they going to end up with projected in their bank account as they invest with us as partners. To date, we have deployed over $52 million of equity, and we're really excited to share this new opportunity. So what are we offering here? What is this opportunity, Colony Apartments? You've been hearing a lot from our team on why we're excited about Colony Apartments, and today is our time to deep dive into what this opportunity presents. What we're doing with this opportunity is we're partnering with you to raise the capital for up to 2.5 million of equity for this redevelopment of this amazing 9-building garden style multifamily property here in Shaker Heights. As you can see, it's this beautiful brick buildings, 9 of them, all near each other with similar layouts. The projected return structure, which I'll go into in the next slide, is for a Class B investor, 12.5% projected, all the way to 16% as a Class A investor. Oftentimes I'm on conversations with prospective investors and current investors, and they ask, what is the average cash on cash return? Over the life cycle of the investment, it's a 6.72%. Now, as we do a value add investment, our goal is for years 1 from acquisition all through 3 to be using capital to renovate, increase rents, manage expenses effectively, and increase the net operating income, which in commercial real estate drives the value of the property. And for us as all partners of this property, drives the valuation, which then distributes excess cash flow for us to participate in. And so for this strategy of this redevelopment, we put a 5-year term. Our team, our underwriting team, our acquisitions team, and our construction team has gotten together and really looked at, from a scope perspective, how can they renovate a 153 unit building in the most effective way right here where we were founded. We're really proud to have acquired this at $7 million at a really great acquisition price here locally, based on our acquisitions team's savvy ability to constantly vet high quality deals and look for that diamond in the rough that we can then bring to our investor community. And in order to raise the property value, it is important to actually infuse it with money to actually cosmetically update it and structurally update it. So in this project, we are planning to renovate with a little under $3 million. And that's really going to provide that opportunity to do what the past owners and management companies have done ineffectively. They've mismanaged the property. And because of that, rents have been low. They haven't really drove other income, where we find opportunities to really find new ways to create value or income streams. That's where we come in. We thrive in this area where we're buying vintage multifamily that's been mismanaged, buying it at a great price, and then acquiring it, renovating it, turning around the operations, cosmetically changing it, structurally changing it, and then raising the value of it. Oftentimes people ask, how often will I get a report on it? How often will preferred return be paid? So the schedule for this investment is a quarterly reporting, and the preferred return schedule, because of taking the capital that investors invest, for the first 12 months, the preferred return is accrued. Then following, the first quarterly payment starts in month 15. We're really excited about this opportunity just because it presents really staying what we do, focused on really great deals that we're experts in, this vintage multifamily that's ripe for redevelopment, and really an opportunity where we excel. If we stay right in our zone of expertise, that drives us to preserve your capital and build wealth. And that's what we do at Smartland. We're really privileged to have a lot of you here that have trusted us to do that and continue to do so. So we hope you join us here. But next, I'm just going to break down a little bit of, what does it mean to me for a Class A investor? What is a Class A and Class B investor, and kind of how do I participate? So here's what you're getting if you participate at different levels. I always like to walk through a Class A investor at $100,000. It's easy to understand from 100,000. So for a $100,000 investor, the preferred return is 9%. For a preferred return means that you as an investor receive all excess cash flow until you've received a 9% return. We believe that is the best structure to align our incentives with our investors. We believe in being investor centric. Then, as your IRR, your internal rate of return on your investment, is a 16% return. Now, over that life cycle, the equity split of this excess cash flow is 80% of available cash flow. And then once you've received your principal back and a 16% internal rate of return, the equity split changes to 20% of available cash flow. But I think one of the things I love to highlight is that it's really about what is the equity multiple? How much is my dollar changing over 5 years into, growing? And so that's what equity multiple to me presents. For every dollar that you invest, or 100,000, you're receiving 208,000 projected over 5 years. That's 100,000 of your principal plus the excess 108,000 of gains. We're going to walk through an example. But what I want to go through is also for a Class B investor, we set this class to really allow people that are less familiar with us and really wanted to have access to great investments. So our team got together and again did what others did not. We structured a class that makes it very accessible. So that minimum investment is $5,000. For that lower investment, the preferred return is 7% and the projected IRR is 12.5%. I can tell you when I look at tons of investments, one, because I just love to look at different opportunities and investment strategies, a 12.5% yield right now in the volatility of the stock market and the uncertainty is an amazing yield. So we're really proud to present this based on our conservative underwriting that allows us to project these payouts. And we've done it continuously. You're going to see later on in our track record how we've done that historically. The waterfall in the Class B follows the same methodology as Class A. 80% of it excess cash until a 12.5% IRR is returned. Then once your principal and your IRR is achieved, you receive 20% of available cash flow. Again, for a Class B investor, it's important to note whether that's $5,000, $10,000, or anything under $100,000, your $1 turns into 1.76. So $1 is $1.76. So $1 principal plus 76 cents of gain. Whether that was $10,000, that would be $10,000 turns into 11,760 or 1760 of gains. Over 5 years, that's an amazing annualized return. So we're really proud about it, but let's kind of break it down. I'm a numbers guy. We've got some investors that love numbers, some that don't, and they're like, can you just kind of simplify it for me? Can you just walk me through it? So for us, a Class A investment of $100,000, let's talk about kind of what this preferred return structure is. So if you took 9% of a preferred return and you took that to times 100,000, that would mean $9,000 of preferred return per year. Now for the first 12 months, it's accrued, but then it's paid quarterly. So if you took 9,000 times the 5-year strategy, you would receive 45,000 in preferred return. So meaning you as an investor are receiving that return before we as a firm, Smartland, participate for managing the property and taking it through that value creation. Then at the end of when we've raised rents, managed expenses really effectively, and really drove the value of the asset up, at the end, when we refinance or exit at sale, 63,000 of gain is on the capital gain side. So at a capital event, whether a sale or refinance. So that's 108,000 made up of $45,000 of preferred return plus 63,000 of projected capital gains. And that results in 108,000. Then you take your principal, $100,000, and you receive a total of $208,000 at the end of year 5. Now, we're really proud about that because many investment strategies don't really allow you over 5 years to turn $1 into $2.08 and really transform your wealth. Think about one of your stock investments where you don't get your principal back right at year 5 and then can really reinvest that and accelerate that deployment of capital and wealth building. That's one of the big excitements about just investing in commercial real estate with us. But there's other advantages. There's tax advantages, there's depreciation, there's passive losses. And then there's the opportunity to spend time with your family and freedom while you're generating a diversified income stream as you focus on your financial freedom goals. So we're really excited about it. So I'm going to walk you through a little bit about one of the things we think is really important when it comes to real estate. One is location. You see in the top right, you will see all these employers. We have the Cleveland Clinic, University Hospitals, Minutemen, Progressive, the Metro Health, Giant Eagle, and you see Sherwin-Williams with their global headquarters building right downtown, about 12 to 15 minutes from Colony Apartments. If you look at the number of employees that these employers have, they're gigantic. And Cleveland, Ohio is this amazing Midwest city that's gone through the resurgence in the last 15 years and really growing and really changing. One of the things we love about Cleveland is it has these vintage multifamily opportunities ripe for redevelopment, right in our focus of expertise. Also, Cleveland typically has a lot of a renters population, which presents really well from a risk mitigation standpoint for us at Smartland and the investment partnership, because we know that there's renters here in the market. And secondly, we know there's great employers that are diversified across medical, manufacturing, insurance, and biotech, which presents a great opportunity to not be, to mitigate risk in the event that another COVID-19 or a pandemic occurs, and even just look at how we mitigate risk and not have a concentration of one tenant base, whether it was oil or government, such as other areas. We're really happy with the rent growth here in Cleveland, and just overall, Cleveland for us presents great opportunities. And we hope, if you've never been here before, get the opportunity to come visit and see what Cleveland has to offer. Someone on our team or myself would love to take you out or have you come visit our first founding location and our second headquarters. So again, some of the highlights that you may not know: the renowned Cleveland Clinic is ranked #2 in the world and has a huge amount of growth and development right out the side of this Colony Apartments through Shaker Heights. It is amazing that this healthcare corridor has expanded so much. Just this last week, our CEO, Vadim, and myself were at a local networking event here in Cleveland around the newly elected mayor, Justin Bibb, and many of the leaders here across law firms, CEOs of different nonprofits, institutions, and really looked at where is the growth, where do they need help, where does Mayor Bibb and his team need help for this growth. And this corridor of Shaker Heights, where Colony Apartments was mentioned, it showed us that our thesis and our understanding from our acquisitions team to identify this opportunity was right on point. As we see the local government investing a ton of capital, we're ahead of that plan. And this is exactly like how we did with Pine Grove and Woodgate and others. Sometimes we've really identified an opportunity and seen opportunity right prior to that growth and development, which really allows us to increase the returns. We don't put that into our projections and our conservative underwriting. We like to underwrite under the market on what we can control. All of these added benefits only help us. Again, we're a lot of hospital systems, a lot of universities. For us, that gives an employment base and access to talent so that these companies can grow. There's a lot of great things here in Cleveland, and we're really happy about it. So again, I wanted to show you guys a little bit about where Colony Apartments is relative to all these Fortune 500. So you see Colony Apartments right here in this corridor. You also see Smartland's Cleveland location right here next to Progressive's headquarters, Eaton and Parker Hannafin, which are these big manufacturing Fortune 500 companies. We've also got Quicken Loans, Sherwin-Williams, the Cleveland Clinic, all nearby. And to us, that presents a great opportunity to attract the top 5% of tenants that will live in our communities. Let me tell you a little bit more specifically about Colony Apartments. So it's 153 units, average square feet of 662, and it was built in 1945. You see these beautiful brick buildings in the back. That is Colony Apartments. But one of the things we're really excited about, it's 9 buildings, and all of the buildings have the same layout. So when our construction team and our acquisition team is underwritten, we've been conservative and done it our normal way of underwriting the renovation under our period. But because of one building being the same layout as the next, every time we renovate one building, our learnings are going to accelerate our renovation process. That is not built into our projections. One of the other reasons we like it is we look at where is the average rents right now and where can we take it from a market rent. In many of our other investments, we've been the market leader, but we continue to conservatively underwrite at a lower value. So we're really, really, really excited about this. It really speaks to our focus and hits all the points. So let me go into a couple of things of the rents and kind of some of the questions we get from investors, which is what's the unit mix? A one bedroom, one bath, we have 77 units, average square foot, 575 square feet. But if you look at this table, we look at where rents are today, $648, and where we're going to take it. That's the exciting piece, right? So from this standpoint, we're taking rents about $200 more. That is a great aggressive renovation structure. I'm sorry, conservative aggressive renovation structure, because today we are already receiving in our one bedroom, one bath, $999 in some of our local other communities here. So we know that we can get there, but we want to be conservative in our underwriting. If you look at our two bedroom, one bath, you see 76 units. So a great unit mix between the splits of this community. Great size, but also the ability to move rents. In our two bedroom, one bath, we're already achieving way higher than $999 post renovation, but we're conservatively underwriting it to that. So what does that show you? It shows you that there is ability to move rents already $100 to $300, and with rental increases, that drives the net operating income that increases the value of the property. This picture, as you can see in the bottom, actually showcases the 9 buildings next to each other. And it's beautiful to see these beautiful brick, well-maintained, but cosmetically need updated and need a very hands-on management that does a great job of screening tenants, attracting and marketing to high quality tenants, and then improving the amenities and other income that we can drive there that the current management and current ownership has really not done. And I think it's partially because they've managed it for 19 years. They have really not set the status quo and not really focused on driving the value. That's what presents opportunity for us. So again, we'll go through a little bit of the comparables. This shows you where rents are and how we're comparing it to local other comps. You can see some of the other comps and where their rents are. We believe that we can achieve those. One of the exciting parts for Colony is it's 85% occupied, and that allows us, instead of having to wait till lease turnover, we can go in and renovate those existing ones and showcase these new renovated units to our existing tenants, and then capture new tenants that want to lease at a higher rate. This presents a better opportunity from a renovation structure because we are already under contract to acquire this property. But the minute that we close on the property, our construction team can be deployed and start accelerating the value add or value creation plan. So you can see some of the comps in the one bedrooms. And again, it just showcases why we believe that we're going to take the current rents to where we want them to be. Go through a little bit of the two bedroom comps, and they support the same initiative. So I want to go through a little more of the meat and leave some time for Q&A. So if you have any questions on the comparables, we can go through after on a scheduled call with myself or someone on our team. So one of the things we look at was just, how are you going to get to this value in year 5? How are you going to improve the property's value and actually be able to sell it? One of the things we look at is, what are the comps? And so when we look at the sale date and local sales, you look at the sale date column and you see what price did different comparables in our market sell for. And we can see local comps at different values when they were renovated or bought or sold. And you can see the per unit pricing of it. We're really happy about these because many of these were not renovated sales. They happened where current owners like ourselves were acquiring a property, but they had not been improved in value. So we know when we're acquiring in that 45 to 55,000 per unit range, and we can increase the value through our value add components that we know that we can exit at a high value. And we've seen that already at Breakwater Apartments, and we've seen that in different refinance packages on assessments of our current properties. So we know that the value's there if we drive the net operating income, which we at Smartland have been able to achieve. So we're going to go through, and as you can see a renovated unit in the bottom picture. I'm going to go through a couple of our before and after, but let me talk about just the highlights of Colony Apartments. So one is rents are below, which we walked through. Two is that we have the ability to renovate and modernize. Something we do different is we try to put in smart technology that you may see in Class A buildings, newly developed buildings, but we put in smart technology, Bluetooth locks, USB outlets, and we do a lot of these really high-end renovations that are high tech. One, because it attracts better tenants. Two, because it provides a greater tenant experience. Three, it creates less leased turnover, and also it's more efficient for our team to manage. That is a great strategy, one, because we're drawing in great tenants. Third, I touched on it with the occupancy being at 85%, that allows us an opportunity to really increase the occupancy to the market. And where we see the current market at 95%, this already shows us we have a 10% capture in the revenue and net operating income that hasn't been happening today. One, because of being managed poorly from the existing managers. One of the important parts when we look at where we're investing is what is the school systems like. Here we have Shaker Heights. It is one of the A-rated schools. If any of you have kids who look at where am I going to send my kids to school, and whether you can't afford it from buying a home, you want to rent in an area that still qualify for those schools. And that's what Colony presents us. So it's really attractive in many different components. And then access to jobs and access to really burgeoning areas of redevelopment. You have one of the best RTA or regional transportation agencies here in Cleveland, very short access to walk to a local amazing mixed use development, Shaker Square. And then you have University Circle and the Van Aken District, which are 10 minutes. I myself get my haircut in the Van Aken District and love the area. I go back because I'm really fond of just growing up in Shaker Heights, and there's just amazing restaurants. So let me go through and just show you what we do. Like when I say we renovate and we put in new technology and we transform a unit, what we do is really, with this capital that we infuse into it, we take the before, as you see on the left, of a living room, and we absolutely transform it, putting in high-end fixtures and really transform the amenities. So we transform it from old vintage to modern. And you can see the before and afters of a bathroom. Again, that really amazing appeal that our construction team has perfected in streamlining our processes, streamlining our buying power with some of the big players, Home Depot, Sherwin-Williams. We're one of the largest buyers here in the Cleveland area, in Ohio and Florida, because we're able to buy at such large volume. That allows us to present better savings to our investors and manage the process more effectively, because we've perfected what colors do we want to do, what templates from a flooring perspective, how does it need to be renovated, what is the structure. That all streamlines our processes and presents a more efficient process. That's what we do here at Smartland. So you'll see in the bottom section, you'll see some of the kitchen renovations, and you'll see, wow, how are these people living in these kind of old, outdated kitchens? But then you look at what we do in our existing units, and these are actual ways we transform them. And that's how we achieve the rents that we do. And then you'll see opportunities where we see whether it's a party room that has been underutilized or hasn't been serving tenants, or can be treated as additional income. So one thing I wanted to just go back to, and one of the topics that I wanted to talk about was, when I was discussing with our acquisition team, they talked about why are they so excited about this? Jack was sharing how he really loves the other income side, because we know that rents currently are in place at an average place, but with our renovation process, we're really going to create upside. But the current management team, and I'm going to just look at my notes, one of the things they were really excited about was that there's parking income that can be captured. 9 buildings, all these detached garages, and we can actually create covered garages and charge rental prices that are under market, but add value to our tenants. That's an exciting part. Utility reimbursement has not been implemented. So we can pass through these utility reimbursements that drive our net operating income up. And we've done this continuously at properties, and this hasn't been done historically at Colony. So that's another opportunity to capture more other income. And then what we believe is really important nowadays, we focus on wholesaling our own internet to our tenants and building that internet infrastructure. One of the reasons is because nowadays, as you may know with your family, most people are on more than 3 devices at a time during a household. So internet power matters and quality internet. So we've taken that out of the hands of providers and really decided we're going to actually build the internet infrastructure so that our tenants always have the best internet. So they stay because they have great high powered internet that drives their devices and their quality of life. Additionally, some smaller other income items are vending and storage, which are other opportunities to grow. But just, these 5 other income areas are ways that we at Smartland look at opportunities for where we can drive new revenue streams and actually capture and increase the value of a property. So we have covered a lot here, but I want to touch on a little bit about our track record and why we feel really confident in doing this. We've already done 2,000 units scattered site in Northeast Ohio, as we've invested across all areas in Cleveland. Additionally, in multifamily, we've done Breakwater, 131, Parkwood, Body Block, Lee Miles, Bosworth, and that track record of delivering returns, raising rents, renovating, it just shows that we have the ability to do this. We know that if we can do scattered site, whether it's single family and multifamily across Northeast Ohio, that this 153 unit with our team can be deployed much more effectively. We're really disciplined on being conservative and having foresight to know, that the economy is at a high, but will it stay this way? So we underwrite to areas that we know we can achieve. We're really diligent in our due diligence and how our team and our acquisition team goes through thousands of deals that only make it down the pipeline to then put offers on a handful and then to tie up a property that then we bring to our investor community. And to us, it's really important to only bring opportunities where we think that we can excel and really protect your wealth, as well as our firm and our principals, as well as our employees are tied to the performance here. A lot of our principals, them and their families are heavily invested in Smartland, and it's important to make sure that we're all aligned in how we grow our wealth together. And again, I touched on it before, but being vertically integrated just delivers a better experience, which we're extremely happy about. So here is a little bit of a more detailed track record. It kind of goes through a high level. This will be shared following. For those that want a copy of this presentation, if you'll just drop me or I would like one in the comments, I would love to hear that. And our team will capture your emails and make sure that we drop that to you. But the track record really touches on where we've gone in our history, how we've invested over what time frame, what equity we've deployed, what renovation we've done, and how we've achieved a certain projected return that we've gotten. Over our life cycle, we've delivered 21.8% average returns to investors. And again, we talked about it before. It's really important for every dollar that someone's put in, they've received $2.10 on average across all of our investments. So here's another page of our track record, and I'll kind of go through one of our case studies. So one of the case studies here is Breakwater Tower Apartments. This was bought in 2017 and was an opportunity to look at where average rents were in place and how we were able to renovate 112 unit and be the highest comparable rent. Today, we have taken it from 88% occupancy at acquisition to already 100%. We increased the value from a $5.7 million value to 7.2 and have continued to deliver returns on that. Again, this was a 5-year investment strategy. We actually delivered return and principal to our investors in under 3 years and achieved a 2x equity multiple, which resulted in an 18% actual IRR to investors. We're really proud about that. Another investment we bought during the height of COVID was May 2020. And already it's actually more, after talking with our construction team, it's already 65 to 70% of renovated units. And at acquisition, rents were $521, as you can see here, and $612 for 2 bedrooms. And we're already achieving right now at the height of this market, $949 and $1099. We're really proud about this because this is 144 units, already 65 to 70% renovated, and already achieving our projections and pro forma in a much more accelerated standpoint than our underwriting had underwritten. To me, that speaks to our conservatism, our ability to generate these returns through actual operational expertise, and really focus in areas where we see, as you can tell from these buildings, vintage on the outside, cosmetically deferred maintenance, structurally deferred maintenance, where we as a vertically integrated company can excel. So really being focused on that is where we focus on. So what I'm going to open up is a little bit of question and answers just for the next couple minutes. I want to be in the honor of your time. We're going to end this webinar to educate you on colony apartments closer in the next couple minutes, but I want to give you a chance to ask some questions. So if you'll put some questions in the chat, I would love for you to share some questions and answers, and then I'll give you guys the opportunity, because right now we've already had a soft commitment launch, and we're really excited because so many of our past investors and new investors have already subscribed. So we want to share with you, again, the classes of investors. A member of my team is going to drop in the comments a soft commitment form where you can fill out a non-binding soft commitment, where you can put your name, email, and the amount that you would like to invest, and we'll do that. But I see some questions and comments in the chat. I'm just going to look over to this side. So people are asking a couple things, and so let me just go through those one on one. Let me read for a second. Stan, yeah, I am very excited. Stan shared that he's excited about the immediate area. You know, for some of these insights that you get from local leaders, whether elected officials, local developers, local legal counsel, accountants, really showcases where growth is happening. For us, it's really important to be tied in and networked in the community so we can hear about opportunities and also know where opportunities are. And so we're really excited about that, that the area continues to be growing and that there's a lot of investment there. So Frank, you asked, will Smartland ever sell the properties? One, I want to thank you for asking how I am. Doing really well. I'm happy that I'm here with you guys. So Smartland, the plan is always to maximize the value for the partnership. The strategy is at 5 years. If the max value is to sell to a third party, we will. If the better plan after renovating and managing it is that we see growth in the area, we will refinance so that investors' capital is returned and they can either go on and do what they would like to invest with their capital, or get that principal back to do something else with it, or invest with us in another project. But the goal is if it's a great growing area, that we as a partnership will refinance and stay in that area and continue to participate in a great community that's fully renovated, and continue with the holding it. And you as a partner stay in that property at a different waterfall once your principal and IRR is achieved. But you stay a partner in that continuously until Smartland is no longer managing the property. So I see a couple people asking about the decks and some of the track record. We will be sending that out following this presentation, either at the end of today or tomorrow. So I see a couple people sharing that. Let's see if we have any more questions. Perfect. I see that Matt on our team has done an excellent job of putting in the soft commitment form. Again, if you click that, you will come up with a screen like this, and you can just load your information. Again, it's a non-binding investment opportunity, but we do only take investments based on a first come, first served basis. So once people have actually submitted their information and fully onboarded is when we do that. Many people sometimes ask, what is an accredited investor? And so here's the definition of an accredited investor. There are 2 tests by the SEC. One is a net worth test, which is $1 million excluding your personal residence. And another is the income test, which is if single, $200,000, and if married, it's $300,000 for the last 2 years, and you are have a reasonable expectation to continue that. So if you qualify based on either of those, you qualify as an accredited investor. And we at Smartland invest and participate in a third party that does these accredited investor evaluations. So a member of our team, as you submit your soft commitments, will help you process and verify. Typically that happens with an accountant, attorney, or showing your W-2s or tax returns or personal financial statements to support your net worth or income. Let me continue with any other questions. All right. So Nilu, the earlier the better, just because of opportunity, because the allocation for units in the partnership have been already subscribing after we launch this. We will send out continuous communication as we go on through the marketing this property to our investor community. So you will see more communication on the timeline. But if you want to participate, I encourage you to submit a soft commitment form today. So Tahir, you asked, the upgrade is 2.9 million. That is 50% of the acquisition. Seems high. So if you look at our past investments, we've been able to take those existing rents and acquisition per unit perspective, put in and infuse from a renovation standpoint, a large number per unit to achieve that rental increase. But we've also been able to raise rents and other income in ways many others don't. So if you just look at acquisition price, I don't think it's the best yield. What you need to look at is where are rents, where are rents taken over the 5-year period. Secondly, how are expenses being managed, and where's other income? If that happens over a 5-year period and you feel that those assumptions are conservative, that's how we achieve our actual increase in value. And our team continually stress tests our underwriting to make sure it's something we achieve. It's important for us to really focus on under promising and over delivering, because we as a firm are built based on our reputation. I'm happy to discuss with that offline if you have any more questions. Shrihari will absolutely get you a copy of that. John, you asked, let me just read this real quick. Yeah, John. So John asked, you predict a 16% IRR. That is an annual IRR over a period before the principal return, 3 to 5 years, correct? So if it is 5 years, then we are expected to double principal. So for a Class A investor at $100,000, you're predicted to turn your 100,000 into 208,000, which is more than a 2x or doubling your principal by a little over double. So that is correct. John asked, does it just show the depressed price of the property? Are other properties going for a much higher price per square foot? John, I'm not sure if I'm understanding your question from a rent per square foot or a sale per square foot. Please feel free to follow up with me after. Okay. So he's saying, I'm referring to your purchase price. Does it just show the depressed price of other properties going for a much higher price per square foot? So Tyre was asking about the increase in value between purchase price to exit value, right? He's asking about purchase price plus renovation plus plus exit. I'm not sure if I'm understanding your question in the chat, but happy to discuss with you offline. It's just not clear in the Q&A. To Frank, if Smartland does sell, will Smartland provide property management for new owners that can offer a nice offer for the renovated property? Frank, here at Smartland, we believe in managing only investments that we have renovated and controlled from a renovation process. So we typically do not, is not to say that we wouldn't consider it, but we typically do not provide third-party property management to other firms or owners. And so I just, in the honor of time, it is right about that time where we just are going to wrap up. But again, please submit your soft commitments. I'll have Matt on our team drop that in the chat again. Matt, if you could drop that in the chat. And again, here are the Class A and Class B investors. Again, we'd be so privileged to have you here. We're really happy that you joined us today and learned about our colony apartments, why we think it's excellent, why it really focuses in our expertise, how we're going to drive the value of the property and generate higher returns for you as investors. So if you're thinking about getting away from the volatility in the stock market, diversifying, or participating in real estate, that has been an asset class that has been tried and true through inflationary times and deflationary times. and is really a great diversification and opportunity. I would love to ask you to partner with us at Smartland. It's a great opportunity. We have an amazing performance of doing this continuously, and we would love for you to join us. So again, please submit your soft commitment. I'll stay here for a few more minutes as we just let the soft commitment forms come in. And I see Matt did drop that in. So again, thank you all for attending. I'm just going to go through and just thank everyone. Donna, we are expected to talk this week on some of the questions that you had. Girish, it was great to talk to you. I can't wait to see you on Friday in the Pittsburgh area. John, as always, it was great to catch up the other weeks. Carla, I think you have to tell me about your recent trips. Some of the others, Israel, Milu, Sean, Shrihari. Really happy for some of our old investors and new investors. We're really happy about how many of our past investors continue to invest with us in investment over investment. So that shows us that we're doing something right, we're doing something well, and we're always here for feedback and improvement, and we're always trying to deliver the best experience for you guys. So again, want to thank you guys for taking this time today. In honor of your time, I am going to make sure that we wrap it up right at the 45-minute mark. But again, really privileged to have you. Frank, cheers to you. Thank you for just the energy and being here. Really happy that you guys could think about investing in Colony Apartments and this opportunity. We've had many investors that sat and didn't participate or didn't take action on whether it's scheduling a call with our team, submitting a soft commitment form. The best process is just to get educated. And then as you figure out if it's right for your portfolio, then decide if it's right for you. That's what myself and our team is here for. So if you need a resource, please email, submit the soft commitment form. It's non-binding. And then let's discuss any questions you may have so that we can help you, guide you in your wealth building journey, and really drive, to me, what's important is financial freedom. I do want to just give a shout out to my dad. It's his birthday. He is one of the reasons that I do what I do. So just want to say cheers to my dad. Happy birthday, Dad. Born right here in Shaker Heights, and just privileged to be here today. All right, guys, I'm going to let you off. Thank you guys for joining us. Come join us in Colony Apartments. Smartland's Colony Apartments is going to be something that you really are proud about. Come visit us. Come see us in Miami or Cleveland. Submit a soft commitment form and join us. Cheers, everyone.